Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Wednesday, the 17th of August, 2022. A lot going on today. So equity futures starting off red again, just like yesterday, though they gained off that red level and closed better. Major indices looking down between 0.5% and 1% right now. VIX is bid. Oil, natural gas, slightly green, despite Russia announcing an oil production increase. Sad gold down again to 1782. Interest rates ticking up across the curve. UK CPI came in at 10.1%, highest since February 1982. On that reading, yields surged globally. So here we are. We've got a tick up in interest rates for sure. Russia also announced they're going to lower gas output and pipeline export forecast for 2022 to 23. Putin really trying to put the squeeze on Europe. He wants them to suffer this winter. Norsk Hydro in Europe announcing shuttering of aluminum plant due to power costs. So we talked about this as a strong possibility. Just the cost of running these plants is simply becoming too expensive. So next month they're going to shutter. They're going to shutter their aluminum plant. We are long Alcoa. We are long Nucor. We used to own Freeport. We may pick that up again, not sure. Copper is very economically sensitive, and I'm not too enticed to be long cyclicals right now. But nevertheless, we might add to our Alcoa holding. I just don't see this trend changing for the better anytime soon in terms of power prices in Europe. One thing that's interesting, a lot of triple Q long bets have been made in the option space. So the past month has been quite a different story in terms of mass bearishness to now pretty bullish option bets being placed for the forward 6-month time frame. Something to be aware of. So that's I would put that in the counter indicator camp. Also news out that Chinese troops are traveling to Russia for joint military exercises. That's fun. And the S&P, so the market itself, S&P did touch its 200-day moving average yesterday. It did back off from that level. Today it looks like it's going to gap lower. If one were to position short, if one were inclined to add some short exposure to the portfolio, this would probably be a decent time to do so. You've got an easy stop loss above that 200-day, a confident break above that 200-day for the S&P would be a logical trigger to close that short position out. So that's just kind of a food for thought there. New money in terms of long, I think the following still look interesting. The med device space, healthcare in general, mostly med device and pharma, defense-based materials, and we talked about this, steel, aluminum, to some extent copper. And specific secular growth stories are working. So to the extent you're following specific stories out there, whether it's Techland or whatever, specific stories are working. I'd be careful of anything consumer discretionary still. That just kind of, Target's got their inventories up. They're out today. TJX, I thought they'd have a pretty good print. They're okay. I don't know. It just doesn't look... It doesn't, for me, consumer discretionary is not really cutting it at this point yet. So that's it. That's all I got. Have an awesome day. I'll be back to you tomorrow.
some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.